Welcome to the Hamsley Analytics Daily Market Commentary. I'm Paulo Navarro. Today is Thursday, July 3rd, 2012. For the market internals, the New York Stock Exchange advanced decline differential closed at 1,489. The Nasdaq advanced decline differential closed at 1,020. There were 53 new 52-week highs for the S&P 500 and none new 52-week lows for the S&P 500. For the volatility, there were 280,000 contracts traded on the VIX today with 41 million in total premiums paid. For the dollar-weighted put-call ratio in July, we saw a 3.2 reading with 72% of the premiums paid, which was bullish. For August, we saw a 1.6 reading with 25% of the total premiums paid, again, bullish reading. Here we have the daily chart for SPX, another update today. 8.5 handles up for the day, which was pretty good, almost finishing at the highs of the day. You can see here we're confirming the movement from here to the last Friday's reversal here. 2 updates after huge Friday's move, so it was good here. And also we're still on the +1, +2 sigma channel, which is good for the market. We're not overextended to the upside. We confirmed the upside break here of the high of last week, so that was also good here. CI pointing upwards, and CI dip continues to build into the upside, which is positive. Tomorrow we have off, and Thursday is going to be a regular session. Today we only had a half day, and Friday we have non-farm payrolls. For the daily chart here, you can see let's look at the 5-minute chart. We went up since the open, pretty much going higher all day long. You can see here. Then we break a little, went back, tested a little there, and then just came back into a close and rallied almost at the highs of the day, which was good, as I mentioned earlier. For the SPY, we're gonna look at the daily chart. We're breaking +2 sigma, as you can see here. Our target is 138.84. We're gonna see if we get a good number of non-farm payrolls, maybe make it until 140. That's gonna be pretty good for the market and start taking all these highs that we had built overall after this sell-off that started around April, beginning of May. So we want to make a new high here and break all these highs of the year that we have already made. On the weekly chart for SPY, we finally broke 0-sig line after almost 1, 2, 3, 4, 5, 6, 7, 8 weeks. We haven't break 0-sig line here. This is pretty positive. Once we broke here to the downside on 2012, we haven't had a close above the 0-sig line, and we are already up there. So we want to see a Friday close here above the 0-sig line. On the weekly chart, that would be pretty positive for the market, forming here some type of bottom, leaving the downside behind, and start turning here, as you can see, and maybe looking for 143 on the weekly chart. That's gonna be longer term here. We're gonna have to take the highs of the year, but that's so far what we're looking at. You can see here on the weekly chart also CI is turning, now pointing higher. CI diff is also pointing higher after a big turn here from this low seen a couple of weeks ago. So we're now seeing some positive and bullish momentum here on the market. So we're gonna see if we confirm it Friday with a good non-farm payroll. That's gonna be critical here for the SPY and SPX. If we look at GLD, we're gonna start with the daily chart. We broke 0-sig line today. We talked about that yesterday. We got up today 1.4%. Good action here on GLD. 157.50 so far on the +1 sigma. We want to see a break above this high and then test and go break even this high. We don't want to see it failing here to make a triple top or even a slightly lower highs, as you can see here. So a break above these levels here of 158.30s would take us to 159.45, which is the +2 sigma, and then even going to 161.56. Again, remember Friday is non-farm payroll, It's gonna be basically news driven, so be careful here. And the 0 sig line is at 155.23. Also, if we look at the CI, it's still flat to CI dip and CI flat also. So not looking at the upside momentum that we have been building since the European news on last Friday. For the weekly chart on gold, here we could see we're gonna test the 0 sig line here. It's gonna be critical to break it to the upside. We have not been able to break 0 sig to the upside and close above it on the weekly chart since we broke down here in 2012, and then after that it's just been a drift lower with basically some rebounds here. So a closing above the 0 sig line on the weekly chart is gonna be critical here for the momentum on gold. Right now the 0 sig line on the weekly chart is at 159.28, so we're gonna see what happens around 159.20. It's gonna be by Friday close, so we're gonna see what happens here. We're getting some bullish signs here on CI on the weekly chart. You can see here the turning around, almost pointing higher now, looking to go for positive territory, and CI is now going higher. So those are the two on the weekly chart, but still we want to see a close above the weekly chart. If we fail here, could be a good entry point to the downside. Last chart we're going to look at is the VIX. Here we have the VIX. We were basically flat today, down 1% at 1664, pretty low volatility. We're looking for the 1560 target, and that would be a pretty good level here on the volatility as the market starts rallying here to the upside. So you could see CI is now pointing lower, which is good for the stock market, and CI dip also increasing momentum to the downside, good for the stock market. On the weekly chart, we broke 0 sig line last week, we closed up below it, and we have now confirmed here. We tested 0 sig line and went down again, so we want to see another close below that 0 sig line on the weekly chart. Okay, here we have the daily chart for the number of 52-week highs and 52-week lows for the S&P 500. You could see here that since Friday we have basically exploded to the upside here, more than 40 per day here. You could see yesterday here we had more than 40. Yesterday we had 62 that we talked about, and today we have 53 new 52-week highs for the S&P 500. Pretty positive action here, and the lows for the S&P 500 has just went down almost to zero. We're right now at 1. Pretty good action here on the 52-week highs and 52-week lows. And here, if we look at the McClellan oscillator, this is a warning sign here. We are overbought. We are at the highs of 2012. You can see here this was the high, then we broke it for the last week's high, and now we are at 287.46, pretty high reading here. So this is a short-term overbought market. You can see here the highs of last year were around basically lower than we are today, so we have to caution here to the upside. But again, non-farm payroll is going to be critical on Friday, and that's what we're looking at so far. We have a special offer by TradeStation. Get your Hamsey Analytics proprietary indicators paid by TradeStation. Contact Active Traders office in Chicago, Peter Albino, at the number listed below. Have a great 4th of July. I'll talk to you.